If you're a trader who's struggling, you're not alone. It took me 21 months before I could get my first funded account. And that's when I left Wall Street and I thought I was gonna be a millionaire in 3 months. So in this video, I'm sharing 5 hard-earned lessons that I learned personally that could be the difference between staying stuck and finally leveling up. Let's get into it. All right, welcome back. It's your boy, Chyke Investing. Before we get into these 5 key lessons, I want you to do me one favor. Can you press that like button? That'll be great. If you could just press that like button, that'd be awesome. And also you could subscribe so that you could stick around. Don't miss a single video. Also press that notification bell. Leave a comment below about one thing that you're grateful for this week. And also join that free Discord below. Most importantly, there's a lot of value in there, and I'll see you guys in there. Now, I'm gonna be going over 5 lessons for struggling traders. That may be you, or maybe people you know. Maybe you were struggling at one point, maybe you're gonna struggle in the future. But these 5 key lessons are always gonna be critical. 1, you have to accept that losses are unavoidable, okay? And so are losing streaks. Now, trading is all about probabilities, okay? So no matter how good your strategy is, the market does have an element of randomness. And that is why it's important and key that you recognize that losses are inevitable. No matter how solid your strategy is, right? Your win rate will never be 100%. In fact, you'd be lucky if your win rate is 50%, even after 5 years of trading and you're an expert. Okay, some of the best traders in the space only have about a 35 to 40%, 50% win rate and are still making millions of dollars. With that being said, inherent in the fact that you cannot have a 100% win rate, that means that you will take losses and you have to prepare your psyche, okay? You know, I'm a Christian. The Bible actually does say that you need to make allowances, right? Typically it's talking about for people, but that's also in your life. You need to make allowances in your mind that you yourself are going to make a mistake, right? You yourself are actually going to do everything right and still lose. And so don't let that discourage you. You got to keep trading. The second thing that I would say is be aware of the conditions that you're in. There are conditions where trading is a lot less likely to go in your favor, okay? Where price action is going to be pretty abysmal, right? It's likely that you can expect that to be the case. And the probabilities of you having an accurate and profitable trade drop dramatically. And it's on you every single morning when you open your charts to identify those conditions, right? So did we move a lot overnight, right? Was there a 300-point drop during London? Okay, that would allow, or that would typically have consolidatory price action follow through in the AM. Okay, is it a day after a holiday? Was there a small opening range gap, the 9:30 open, right? And so the first 30 minutes of the trading day are likely to be pretty choppy. Are we in seek and destroy conditions where London highs and lows took out Asian highs and lows, right? You know, so on and so forth. I've done a separate video on what conditions can we identify that, you know, it's probably not worth trading in. You know, one of the biggest things also is, let's say, for example, if AM moves a lot and, you know, the PM can be lackadaisical, especially on a Monday or Friday. So, you know, there are conditions where, hey, you either need to lower your risk or just close the charts because you're anticipating price action to fall off in quality. The third thing is limit the trades that you take a day. I have a personal rule where I don't take more than 2 trades a day. Right. And this is an issue that a lot of new traders face, and even intermediate traders who are struggling. Right. But those who are advanced know that limiting the amount of trades that you take a day is a key turning point in your ability to turn profits. Here's the reason why. If you are not setting a limit on how many trades you can take a day, you will be taking everything that you see, right? You're not going to be patient enough to wait for the high quality setups. If I can only take 2 set trades a day, that means that if I take the first 2 trades in the first 30 minutes, right, then I've just wasted my opportunities for the rest of the day. They probably weren't the best setup. If I take a couple more trades, I probably took losses on them. And so it's important that you incentivize yourself to wait for high quality setups by limiting the amount of trades that you could take a day. It also prevents you from over trading and end up blowing your accounts. if your win rate is, 30% or 34, 35%, that means you're going to win 1 out of every 3 times. So, eventually it's going to be very difficult for you to blow your account if you just take 2 trades a day, knowing that after the 3rd trade, on average, you're actually going to make that money back. But, assuming your risk to reward is adjusted accordingly. And so, there's a lot of reasons why you should limit the trades you take a day. Normally if I take a loss, then I can take 1 more trade. And if it's 2 losses, then I know that I'm done for the day, right? If I take a loss and then it's a W, then I've made the money back and then some, right? And if I take 2 Ws, then I've expanded my account. So, that's enough for me. And I would implore you to kind of think about your own strategy in a very similar fashion. The 4th thing I would say is formulate a plan and follow it, right? So I have a very specific model. I need to identify what is my higher time frame bias. The intermediate time frames like the 15-minute and 5-minute need to be aligned. Like the 15-minute can't be bearish when the daily and 4-hour are bullish. I'm looking to enter on the 1-minute, because even though long run on the daily price is looking to go higher, it doesn't mean that in that 30-minute window that price is ready to go higher. Right? I need to see on the 15-minute that price is actually starting to look bullish as well and getting in confluence with the daily. Right. And so, and also like it needs to be the right time of day. I don't really trade during lunch. I don't trade before 9:30. Right. I don't trade after 4 o'clock. It needs to be within the kill zones. And even within those kill zones, there are typical characteristics of, AM sessions, PM sessions, and the trading environments that you need to be aware of that are all based off time. And then lastly, when all those 3 things are aligned, then I can enter with the 22 model, right? Where I wait for a purge on a short-term rate of liquidity and a break of market structure, and there's a fair value gap. And then I answer that and, price runs higher. And so, I have to ensure that every single one of those things are aligned for me to enter a trade. My best trades have always been when all 4 of those things have aligned. And this actually leads me to my last point, because how did I formulate my own plan? How did I, refine it so that I know that over time when I do, actually follow my plan, it leads to profitability over the long run. That's because the 5th thing is you need to log everything that you do. Right. So I do daily logs. I actually do video recordings where I go over every time frame and I just talk to myself about what I saw on each chart for that day. And I also talk to myself about the trades that I took. And I actually have an Excel where I log the trades that I take. And I review each of those videos and each of those trades at the end of the week. And this is hypercritical, because what that allows you to do is to develop and glean learnings over time of the mistakes that you've made. And over time, your subconscious would develop a gut feeling that says, oh, wait, I've made that mistake before. Oh, wait, I made that mistake before, right? Oh, wait, hold on. I've seen this trade before. I need to enter that, right? Because over time, you're programming your mind what is right from wrong. What are typically profitable trading conditions? What are typically profitable, parts of your trading formula that allow you to succeed most. And over time, you can refine that. And that's only going to come from experience and consistent logging and consistently learning from your mistakes. So, those are the 5 things that I would say, if you really try to implement each of these into your trading, in a year, there's absolutely no way that you're not going to see a drastic amount of improvement. And, I'd love to see and hear more about your story. Go ahead and join that Discord below. Don't forget to press that like button, by the way, as well. If you liked what you heard, that's what it's for. And subscribe, press that notification bell so you don't miss a single video. Thanks again for your time. I'll catch you guys in the next video.